Hmm. What up? What up? What up? Okay. Just looking at double checking my setup here. Wait, Mic test. Mic test. Okay. So I've been out in a while. Working. Making money. So don't have much time to record. So today is one of those days where I will record a bit longer than normal. So just want to recap about the strategy this year. Same thing, DCAing every day into my cash wallet. With the strategy to buy at 90k, BTC at 90k, and yeah, the market doing what the market does, bouncing around between the all-time high and 100k level, which is nothing much to talk about. It's just up and down within 10% range, but the DCA is still consistent, right? As you can see in the cash wallet here. And the reason why you didn't have to while I'm working and still DCAing, what I do was I have the opportunity to use my capital to loan out to people, to loan out to some people that I know. They do trading as well. So what I mean, capital is meant to invest and also to use to gain short-term financial gains. So one of them is lending. Okay, using capital for short-term. So whenever you see an opportunity to lend and they agree to pay interest, let's say 1% per month or 2% per month, and the person that you are lending to is legit person, someone that you know or someone that is trusted, you should almost always do it, right? Because his number one is it's a guarantee return, right? If you were to lend your capital. So basically for the past 3 weeks, I got an offer from a borrower who wants to borrow $800 or something or so for 2%, 2% per year, 2% per month, and if he returns then it will be slightly lesser but this is a guaranteed. So I don't pass up on fixed return short term. So so I got my capital back on top of my DCAing while the capital is still being lent. So it's still the same here, 1,003 now after how many days? 1 month or so for this year. So today we are going to talk about the first thing first . So while you are DCAing, you can always use the capital for short-term ROI if the opportunity arises, such as lending, right? Family members, friends, that is legit or you have some business partners or whatsoever to get if they agree, even if you get 1 or 2% per month on it, is always good to get the fixed interest. Number 2 is trading. So if you are not, how to say, if you are, this is example if you know how to trade, then you can always use your capital to trade short term, if possible without any margin or without any leverage to avoid liquidation or to avoid losses that is too large for your capital. So trading is also one of them, and I will show you some tips later on. And number 2 I want to talk about is DCAing and buying the dips. Okay, what's the difference and what is higher priority? So if you can see, for the past 2 or 3 weeks, I have lent my capital $800 to someone that I know for 2% return. 2% return for these 3 weeks and because of that, DCAing, it will still be the same lah, right? So let's talk about buying dips. So DCA is the same thing like every day you buy or every week you buy into Bitcoin or into cash, planning to buy into BTC. And number two, buying dips is to time the market. Number one. Number two, time the market means that you have a level where you want to buy, or you want to scale in lah, right? And which one is better? Should I hold my capital and wait for my level to touch, then I buy using all my capital, or should I just buy every day or every week consistently? So which one is better? Then the answer is DCA is always better lah. It's always better. It's more consistent and it's less stressful lah, right? So for buying dips, I would generally say the return will be higher because you are buying cheaper, alright? But the thing is, it works only if majority of your capital is already in the asset. For example, Bitcoin. So for example, if you already have accumulated Bitcoin, for example, let's say for me like I've already accumulated Bitcoin for the past 4 to 5 years, and for this year, buying dips using my capital for the year is better because I'm already in it, right? And how to say, because because I already own the asset, majority of my asset I already own it, so buying the dips makes more sense, right? Because even if volatility hits, I'm already in the market, right? But if you are not in the market yet, for example, you are new, you are starting this year, starting last year, you have less than, let's say, 10k in your capital or in your net worth in terms of investing, you should almost always DCA, right? Almost always DCA. You will always give a more consistent return compared to buying the dips. And the reason why is because buying the dips, meaning to say that you are planning to enter at a certain level, a discounted level. And the thing is that with BTC, because BTC is the best asset with the highest ROI for the past decade, you might not even see a dip, right? So the volatility will be there, but the thing is the volatility might go against your way, meaning to say that instead of it dropping down, it goes up by a lot. So what happens is that you don't have the opportunity to buy the dip, so your capital will be your capital will be mostly cash lah, right? Just waiting to buy the dip. And if you are new, there is always a slight chance that that the dip won't come for 1 year, right? And you just be holding cash and not be invested, and you don't want that, right? Because of inflation, every year you lose 3%, 4%, 5% depending on the market if you are holding cash, right? Because the cost of living will always go up. Remember, your capital is, at the end of the day, is to buy into BTC, and the longer you hold cash, the worse it becomes, right? Because of inflation. So buying the dip doesn't make sense, right? Buying the dip doesn't make sense if you are already not invested into BTC. It means you don't hold BTC, right? So as years go by, as more BTC is being accumulated in your portfolio, then you can start employing buying the dips like I'm doing lah. Starting from I would say this year lah, waiting for a dip then to buy in, right? Because I already have BTC for the past 3 to 4 years, right? So I don't really I can afford to wait 3-4 months and then buy the dip, right? So this is the difference lah. So for the new guys, you just DCA in. Okay, number 3, I want to talk about let's talk about this. If you are invested in any financial asset or into any asset, whether it's properties, whether it's the index fund, whether it's BTC, or whether it's something that makes you money over time, you are ahead of the majority of the people financially. So one thing I want to show you is this one, right? So if you are new to investing and you say, I only have, let's say, less than 10k, it's a small amount of money compared to other people. Or let's say you are older, let's say you are in your late 20s, you're in your late 30s, and you have less than 10k. Always remember this: 27 of US adults, meaning to say above 18, have no emergency savings as of May 2024 polling. What does it mean? This one is after COVID now. It's not even before COVID. During COVID is even worse, right? Because people use their emergency funds. So this is after COVID, and almost 1/3 of people, they don't have emergency fund. So what does that have to do with you starting to invest? Right. So it means this: people who have no emergency savings are more likely to have zero in their bank account. Number one. People who have no emergency savings are more likely to have many debt. Correct? It makes sense, right? It's logical. Number two is that if you are invested into the market, property index, the index fund or BTC, you know that you are already ahead of this 27% of the adults in the US, which is the first world country lah. I would say Singapore will be close to 27 also, right? Because it's not that far lah. First world country is bounce around 2, 3, 4% only lah. So if you feel that investing is too slow, or you think that, oh, I in my late 20s or in my late 30s and I don't have even 10k, think about it. If every day you DCA slowly, you are already ahead of 27% of adults, not population, adults. Human beings that is above 18 that is able to work. You are already ahead of them. Why? Because this capital or that you have that is invested into your asset can also be used as emergency, right? Because it's only an emergency savings if an emergency occurs, right? So if it doesn't occur, that means it can always be it can always be a tool to invest or a tool for emergency savings. So I would say that worst come to worst, your investment can also be used as emergency savings, especially if you are young, meaning to say that anytime you can always recover back that capital, right? So always have this stat in your mind that, hey, whether you only start this year or last year, you only have less than 10k, remember 27% of US adults, they don't even have emergency savings, which led to most probably they don't have any savings, which led to they have debt. That's why they have no emergency savings. And you who have some money starting out into investment, you are already ahead of this 27%. Think about it, and how to say, and realize that, hey, you are actually better off, by just having 1k now. You're actually better off than most people, than 27% of the population in the first world country lah, which is US, right? So don't stop investing, don't stop DCAing, right? Have the discipline and consistency to put your money every single day or every single week or every single month into the asset. Okay, so this is one thing I want to share lah with you guys. Okay, so next one I want to talk about is tips on backtested strategy. Okay, so one tip I want to give to guys. Okay, this is alpha tips. This is printing money. Okay, backtested for the past 4 years. If you keep on doing this, you will make money. Okay, it's backtested, right? So the strategy is very simple. Okay, a lot of people, it looks complicated, but actually it's very easy. So basically this strategy is, I think I should open up one more. Let me. Okay, this strategy, all it takes for you is a couple of hours a day, and that's it. Okay, go to listingspy.net. You go to CEX listings, and you will see this, right? You will see all the new coins that comes out in exchanges, in centralized exchanges, which is, for example, Kraken, Binance, Whoopee, all the big centralized exchanges, Coinbase. These are coins that are newly listed in the market. Okay, so what you do, or if you want to backtest again on my end or on your behalf, you can do it lah. Okay, so what you do is, I would suggest you focus on, if you're in Singapore lah, you just focus on Binance lah. Binance, you can trade in Singapore. So Binance futures. So Binance is one of those exchanges where you can actually trade if you are living in Singapore. I won't show you my Binance account because I don't want to get hacked. There's money inside it. There's a lot of money inside my Binance account. But I will show you later on. You can check for your own lah on your Binance app or on your Binance website. Is the recent listings in Binance, the most recent listing in Binance, what you will notice. Okay, so for the last 4 listings, which is Venice, Venice tokens 1 day ago, and there is Enemy, I think. Okay, there is Pippin, and there's more lah, but I'll show you the 4: Pippin, VVV, Vine, and Anime. So these are the this month, these are the four tokens that is listed in Binance. And if you were to backtest all the coins that is listed in Binance, newly listed in Binance, you will notice something that is you will notice something that is very common, right? And I will tell you why it happens also lah. Okay, so let's look at the most recent one, which is VVV only listed 2 days ago. This is a daily time frame. 2 days ago, and it dumps. Okay, for the 2 days it dumps. Okay, so let me show you from the top to the low. Okay, is 33.3%. Okay, the second token that is listed prior to BBB is Pippin. Okay, Pippin. Let's look at the top and let's look at the bottom, which is now it's at the bottom lah. 59%. Okay, the third token prior to Pippin, Vine. Let's look at the top. Let's look at the bottom. 77%. Okay, this is top to bottom. And I'll tell you why this is very, very important. Let's look at the fourth coin from the top to the bottom. Okay, 54%. So if you notice that the range is super high, the range is super large, right? From the top of the listing to the bottom of the listing is more than, I don't know, 30%, right? But if you were to backtest newly listed coin from the price that it opens, the day the price opens till current, the average is 27%. So on average, let's say look at the first day. Let's say here, if you look at the first day it opens, which is over here. Okay, here on average till current day. Okay, if you were to backtest, on average it will drop 27%. Okay, so this is the average it will drop in the long run. Okay, this is the price where it will end up lah. Sometimes it's higher, sometimes it's lower after 6 months or after 1 year. So this is the price that it will tend to hover around lah, right? So how do we take advantage of this? How do we take advantage of this? Every time you see a newly listed coin that is listed in Binance, right? And it will show up here lah, right? And you can actually how to say, every day you just have to refresh this. And when you see Binance exchange, go to your Binance trading platform, right? And where is it? Go to your Binance platform and then open the chart there, and you can put a number that, okay, what is the price it opens, and then you hover the 27%. So this is what I always do, because some tokens, they haven't dropped yet. So for example, token like this, this is one of them, right? So for Vine opens at let's put a okay, so this is where this level is where Vines open. Okay, and if you were to backtest this, in a long run, it will drop below this line by 27%. Okay, this is what we call, if you were to backtest lah, on average, right? So if you were to pull down 27%, okay, on average the price after 6 months, or it will be hovering around this price. Okay, 27% around here. And guess where's the price now? It's still so high. It's still at 0.25, right? And this is where people who backtest strategies will have an edge here, right? So when you see a coin that newly launched and it goes up and it stays on top, this is where an opportunity for you to put your capital in. I'm not saying you put your whole money in, because this is what we call average. It can always go up, it can always go down, but put some money in, right? At least around this level of 27% below opening price, right? So this price, I will come back again maybe next month, and I will see this price, it will most of the time goes down. Okay, I've seen this countless of times. Okay, the chances of it going down is very, very high, to the point where I don't even think about it, right? Especially long term. The longer it is, the higher the chances, as long as you are in the trade, right? So if you know this, your strategy is very simple. No need leverage, no need margin if you are not using futures. If you are just if you're not using perps, right? You're not using perps, then you don't need to use margin, you don't need to use leverage. All you have to do is just short 1x, and that's it, right? Short 1x and that's it, right? So for example, you short now, right? If target, let's say, to the point is 50%, and all you have to wait is maybe another 3 months, 6 months, right? And your stop loss can always be adjusted. You say, okay, now we know where's the 27%, so where do we put our stop loss now? Because we know the average of it going down, the stop loss is up to you. It's just a matter of risk and reward, right? It's just a matter of risk and reward. So some people, like I would suggest, if you are new, put your stop loss tight. Put it tight so that you lose a bit to gain a lot, right? So for example, if I'm new, what I would do is, so now is at this level, right? What I do is, okay, I know that in the long run it will drop to somewhere at this level below, right? It's 50% return. If I'm new, I don't like risk. So what I do is, we take very small, very, very little stop loss. So for example, over here 20%, right? So for example, you have no margin, no leverage. So what I do is, okay, I'll take this risk of 20%, 20% reward, risk to reward 20% lah. I mean to say 1:3, for example. So for example, you lose 1 in order to gain 3 lah, right? Remember, you're shorting this, you're not longing this. So if it goes up 20%, you cut your loss, right? And you take profit when it goes down to 60%, which is the 27% level below opening price lah, of the newly listed coin. So this is profitable lah, right? And the only thing you should worry about is volatility lah, right? But even if there's volatility in this market, you don't really care. You know why? Because your stop loss is very small, meaning to say you lose a bit to gain a lot. So you don't really worry. You don't have to put so much money, but put some money in, because this has been tested lah. This has been tested for the past 4 years. It always is profitable in long run. So maybe out of, I don't know, 8 coins, 8 of these trades, one will lose lah, one will just shoot to the moon lah, and then the other 7 will just dump. Some of them even drop 90% something, which you gain even more lah if you don't have TP, right? But I suggest to put TP lah, right? Because I go by, my strategy goes by backtesting strategies, not by I think. Okay, so 27% below, around 27% below opening price of the newly listed coin is where you should be taking profit. And if the price is above that, you should always be looking short, right? Remember, no margin, no leverage, 1x short this. Yeah, 1x short. Okay, so yeah, so this is one of those lah. So if you look at, for example, Vine, okay, this is above opening price, and looking at by backtesting strategy, this is going down, right? This is gonna go down to the average, which is below this blue line, right? In the long run, talking about 3 months time, 2 months time, just short it and wait. Don't look at it 3 months later or 1 month later, then you open back and see, or you can always set up a limit buy order, right? So once it hit this 27, automatically they will close your position and take your profit. So I'll just show you 4 lah, right? One is Vine, which is this is profitable lah. And for VVV, if you look at VVV on a daily, this is already out of control, right? Because it opens at this level and it has gone down 29%. So this is a no-brainer, no touch lah. But if you were to catch this, for example, the listing here, it comes out and you are actually refreshing it, and you know that it comes out, let's say 1 hour only, and then when you open the chart and you look at the chart is only, for example, is the price is still here, somewhere here, for example, the first day, so it only drops 11%. You can still trade this, right? You can still trade on the first day, right? Put your stop loss to where your risk appetite is, and then you TP out, which is around now lah, around 1 day later actually, or 2 days later, depending lah, tomorrow or today you want to cash out. But today you can actually cash out already, because today is already, if you look at the bottom here, it's already 38.88. This is the cash out area already. So the people who actually short on the first day, tomorrow they already have 30% return. If you put 1k, you already earn $300 in 1 day by just following this. This is only one example lah. So next one, Pipin. So Pipin, let's look at Pipin. Opening price is at this level, so now it has already dropped, right? But you actually look at this, you have a chance to buy on the first day, right? Which it drops on the first day, it drops 18%. Not really the best, so you don't want to touch this. So on the first day, when you look at this drop, if you miss this drop, you don't touch. And guess what, on the second day, it actually bounced back up to its opening price, and this is where you should get it in. And on the second day, it also bounced back up in a short period of time, where it bounced back another 20%, right? And if you have to short this on the second day, any point in time, whether it's at the top here, whether it's at bottom here, and then you cash out at 20% below, which is around here, you will always make profit, right? Yeah. And I mean, some people, they don't have take profit level, so they just let it ride. Right? But this is very profitable. This is third example for newly listing, all profitable until now, except for VVV. Except for Vine. So the Vine is where you can short here, right? If you want to put some money in, you can put money in Vine. You short this, 0 margin, close your eyes. Next week you open again and TP out, because on average you go back down to the blue line, which is about 27 to 60% return. This is free money, back tested strategy. It's not like, I think it's already back tested. You can back test yourself lah. All the Binance new listing for the past 4 years, you can back test yourself and see the chart here. Next one is Anime comes out on I think 2nd of January. So opening price, again, example here, right? And this is daily, so 1 day, 2 day, 3 day, 4 days, 5 days, 6 days. On the 7th day, Guess how much it dropped? It dropped 48%. Yeah. So this is only for example. I can show you hundreds of backtested coin, not only in Binance but it also in other exchanges such as Kraken, Coinbase. But most of them, Singaporeans cannot use to short. So only Binance you can do it. So if you were to short on the first day, you would have TP out 2 days later, which is here lah, kan 29% or 27%. So on the second day. On the second day, if you miss the first day, let's say on the second day you see this red candle down. Okay. So red candle down is already 26%. And you say, oh no, I didn't check my phone, I didn't refresh my listing spot, I forget to see, and then when I look at the chart, the second day already dropped 27. So what you do? You don't cry about it, fuck it, wait for the next listing lah, right? You miss it lah kan. So yeah, so every single time there's a listing here in Binance futures, right? Open the chart, look at the opening price, hopefully you get to see it on the first day, okay, and then you can short it, right? And if you miss the first day and on the second day it doesn't move, you can still short it. For example, Vine, you can still short this if you want to. It will go down on average, right? This is profitable, okay? Just let you know, Vine is very profitable. I am okay putting 10k in here to short, no margin. Yeah, I'm okay doing this. I just let you know. I have positions in Vine here to short. I shorted on the second day. On the second day, I shorted somewhere here. I'm shorting and I'm just closing my eyes because this is already back tested. So I have my take profit below here. Don't know when. Hopefully next week or what. I take my $500 $5,000 here in the next week. So this is one strategy that I will share to you. Okay, this is free. You can backtest this if you want to, and and let me know lah. How's your backtesting? Depends on how you backtest it lah. But if you were to backtest it manually using pen, pencil, or whatever, you will get around 27%. Okay, 27% below opening price. And this is not what I think or I feel or what. No, this is already backtested lah. You can actually like I said lah, you can do your own research, right? Backtest all the new coins and then you figure it out lah, kan, how low it dropped. And the thing is, because the average is below 27%, from inception lah, meaning from the point it gets listed to current day, 27% is pretty a lot lah. And number two is that this 27% sometimes, or most of the time, it takes less than a week. So within 1 week you already get 20%, right? And if you have capital minus all the fees and the funding rate, all this, you are still the percentage is just insane. 20%. Even if the Binance take a 2%, 3% cut from your profit, is still a big amount of money to be made here. And the reason why is because you ask me, why is all the newly listed coins in Binance especially that I have backtested always drop, or always in the long run it will always drop? Why over the past 4 years most of these coins drop from inception? And the answer is this: most coins, except for let's say the top 10 coins like Ethereum or BTC, most other coins are all garbage, all meme coins, bullshit, all all this Shiba Inu, all this Pepe lah, all these nonsense coins. There is no freaking utility. What happens is that in the long run, because it has no utility, it has no purpose, when people need money, they will just sell these coins because there's no reason to hold it, right? So eventually it will go down. Yeah, it's just natural. It will just go down unless it has a purpose, right? So if there's no utility, such as all of these meme coins, eventually it will drop to, I would say, zero lah. But because people are still holding it, maybe it drop to 10, it will drop 90% or drop 95%, so so it's very profitable to short here, to short all the meme coins, all the newly listed coins that are on Binance. You don't even have to look, you don't even have to look at the coin punya community atau the coin punya socials. You don't even have to look, because these coins have been backtested, whether the community is strong, whether not the community is not strong, whether this meme coin is popular or not, such as the freaking Trump coin, right? Trump is a big thing. Fuck that shit. Look at that dump. If you were to have bought Trump, short Trump, you also make money, correct? After 1 week, just 1 week, right? Same thing apply. Inception of price, opening 27% drop, and that's where you cash out. Yep, very simple strategy. Yep, back tested it. You can try on your own. Start with small money. If you're scared, just do it. It's free money. There are many people that wants to FOMO meme coins right now, and their money is going to be in our pocket in the long run, right? When they sell at the lower price, lah, which we are actually borrowing, because we are shorting, we are borrowing, and then we start to buy back when the price is lower. So this is one thing that I show is free. Okay, this is free money. Strategy that I've been using for so long. Okay, just shorting meme coins when it's listed in Binance, free 20% after 1, 2, 3 months. No need leverage, no need margin, all this, right? So it's very simple. The chart also very simple. You can do it on your own, right? Just draw a line on where the market opens on the first day, or on first day of listing, and then you just draw back down to 27%, right? Draw back to 27%, and then from 20% you put your TP out lah, and then your risk to reward is up to you, right? Up to you on your risk appetite lah. Some people they like a 1:3 ratio. Some people like to 1:100 ratio. Is the risk, the stop loss is up to you, risk appetite. Because the reason why I say it's not as important is because this strategy is profitable, meaning to say no matter what stop loss you put, right? I cannot see it losing money. I would say the worst case scenario is you put your stop loss at the high lah, which is over here, right? Let's say you short here, let's say you short now, the risk to reward you 90%. If it goes up 90%, which you will lose 90%, right, to win, let's say 60%, which is about 1.5. So you risk 1.5 to earn 1, and even that is still okay, especially in meme coins. It's like you risk 1.5 to win 1 is okay. In meme coins, it's like if you put numbers into sports book, right? If you do betting, it's like you bet $1 at the odds of 1.5. Yeah, it's around there. You betting $1 at the odds of 1.5. It's not that bad, like even if you were to very conservative and put it above the all-time high also, I don't think this is like this. Like I think even this is very very conservative though. Like for me, I would put it lower though. Yeah, but because my position is big, I tend to put it not that high lah, right? But if your position is small, let's say $100 USD, right, to gain 40% ROI or 20% ROI, I would put my bloody stop loss very very high, because I don't mind losing everything, right? So yeah, so this is one of those. You can you try it out and let me know lah. You trade you use small amount first lah. And then once you turn your $100 into $1,000, or $10,000, then you confident, then you treat bigger capital lah, in bigger sizing lah, right? So yep, so this is what I have to say lah for today. Hopefully the next week I will do another longer one, right? Already 40 minutes already. So yep, see you back